Hello, Mario Hernandez, CPA from Miami Accountant. Today we're going to be talking about the way that Fishbowl Advanced Desktop integrates with QuickBooks Online in terms of purchase orders and the whole purchasing process, how accounting is affected by your purchasing activities. You're going to generate a purchase order, you're going to receive that purchase order, and then you're going to reconcile it. And we're going to take a look at the way accounting is affected each step of the way. All right, so let's take a look at Fishbowl. And we're going to start by creating a purchase order. Create one for A and B distribution. And let's go ahead and put 100 units of accessories bike bell. And let's do 100 units of discount brake cables. The accessories, let's put them at $10 each. And let's put the brake cables at $20 each. All right, we're going to save this. While it's saved, we just really have a bid request, but we're going to go ahead and issue it. So once it's issued within Fishbowl, it's going to show that the inventory is coming in, and it's going to help you with order management. And what it's going to do in QuickBooks is absolutely nothing. That's because a purchase order is an order management tool. It's not an accounting transaction. So nothing happens as a result of creating a purchase order, whether you have it saved as a bid status or you've actually issued it. There's still no effect in terms of QuickBooks. Once you receive inventory off that purchase order, now there's an accounting effect. Now you own the inventory, you owe money for that inventory, so you need to record that asset and the liability on your balance sheet. Let's go ahead and receive the inventory. We're going to go ahead and click receive in order to receive everything. So we've received the total purchase order. We have $3,000 here as having been received. Let's go to the accounting integration and export this to QuickBooks Online. And we should see one item receipt go over. And there it is, an item receipt. It is sent over. And it says item receipt, but that's not really accurate. Item receipt is really what happens when you have Fishbowl integrated with QuickBooks Desktop. With QuickBooks Online, it's not going to create an item receipt transaction in QuickBooks Online because that type of transaction does not exist in QuickBooks Online. So I'm going to show you what it actually does. So if we come over to QuickBooks, we're going to click over here and see the recent transactions. When you click up here in your search tool in QuickBooks Online, you're going to see your recent transactions here, and that's a good place to see the stuff that was just imported in from Fishbowl. And here's what it did. It created a journal entry. So when you receive inventory in Fishbowl, it creates a journal entry in QuickBooks. And what is that journal entry affecting? It's affecting your inventory asset account. So on your balance sheet, your inventory value is getting debited, which means it's increasing. And then it's also doing a credit to your holding account. The holding account is a liability account. It's another name for it would be goods received, not yet invoiced. So it represents a value that you're going to have to eventually pay, but you haven't gotten the invoice for it yet. So it's not an accounts payable yet. So it sits in the holding account in your liabilities in your balance sheet until a future date when you receive that invoice. And we're going to take a look at that now. When you receive the invoice in Fishbowl, you're going to reconcile it. So, and then that's going to do additional transactions, which we will look at. So for now, we just need to know that when we receive inventory in Fishbowl, the accounting entry that's going to happen in QuickBooks, it's going to be a debit to your inventory asset, which is correct. We need to record that we now have inventory on the books. And then we're going to have a credit to the holding account, which is just a liability account that represents the value of a future liability, a future accounts payable that you're going to have to pay. So it's going to sit in your other current liabilities section in your balance sheet. We're going to switch back to Fishbowl. And now we're going to go to that receiving where we were at, and we're going to say we received the invoice. So now we're ready to put in the vendor invoice information. To do that, we would go to the Reconcile module. And then in Reconcile, we're going to put in the reference number. So that's going to be your invoice number from your vendor. And then you're going to put in whatever that invoice date is. So let's say that the invoice date was April 1st. We'd put in April 1st here. Unlike QuickBooks Desktop, in case you were using QuickBooks Desktop before, with QuickBooks Desktop, I recommend putting in the receive date up here because of the way QuickBooks Desktop does its accounting and its receiving. It just, Fishbowl does it differently for QuickBooks Desktop. But for QuickBooks Online, we can go ahead and put in the true invoice date here, which then allows it, whatever the terms are, it'll calculate the terms and calculate your correct due date once it's in QuickBooks Online. So I'm going to say that we received it March 30th, but our invoice date is April 1st. And then I'm not going to add any reconciling items, any landed cost. That's something for another video. And then our total bill is going to be $3,000. And we have our invoice number. So our bill is complete. We've completed reconciling this purchase order. We had already received it. So now it's considered fulfilled. And that gives us a check mark. When you reconcile and you receive, that's equivalent to fulfilling the purchase order. Let's go back to our accounting integration and go ahead and export. And we're going to see now two transactions that are going to go over. One is going to be our bill. It's going to create a bill for us. And the other one, it doesn't show it here, but we're going to see it in QuickBooks, which is a journal entry. Let's click OK and go over to QuickBooks. And then we will see here, if we come over here to our search tool, two new transactions. So again, the most recent transactions are going to be up there in our search tool. And we see that it created a journal entry dated April 1st, and it created a bill dated April 1st. Let's take a look at that journal entry first to see what that's about. And that journal entry, we can see, is the exact reversal of the original journal entry that was created. So when the inventory is received, it increases the inventory asset and it increases the holding account. So it debits inventory asset, credits holding account. Then when the purchase order is reconciled, it does the exact opposite as of whatever the invoice date is, the vendor invoice date, the vendor bill date. As of that date, it's reversing the original entry. So our holding account will go back to zero for this purchase order, and our inventory asset account will also go to zero for this purchase order. So that might sound like, wait, but we still need that inventory value shown and reflected in our books, and that's true. And that's going to be done via the other entry that came over as a result of reconciling. So clicking on that search tool, the second entry that came over on for the April 1st date is the bill itself. And click on that bill. And then here we have the bill. I'm going to collapse the category section because it's in the items section where we have our information brought over from Fishbowl. We can see it brings over the products and the descriptions with the units, the value. So everything that was on that purchase order in Fishbowl is brought over. We have our bill number as well. And then this bill happened to be cash on delivery, so there's the due date's the same as the bill date, but had it had terms such as net 15, net 30, it would have been reflected here. And then you have your purchase order number in the memo field. I'm going to show you the accounting behind the scenes. You can see that by clicking on the More and selecting Transaction Journal. And this is the accounting effect of this transaction. And here we have it. So we're debiting inventory by 1,000 and 2,000, so 3,000 total. The inventory asset account has been increased and debited. And then our accounts payable has been credited, which means it's also been increased. So we have our liability being reflected and our asset being reflected. Both are balance sheet accounts, and they're both updated as a result of this bill. So that is the accounting that happens. You do your purchase order, there's zero accounting effect. You receive, and then you have a journal entry that goes over. It debits your inventory asset account and it credits your holding account as of whatever that receive date is. And then when you reconcile, you're going to have a journal entry to reverse that original entry. But this journal entry is as of whatever the vendor bill date was. And then you have the actual vendor bill also with that date, debiting your inventory asset and crediting the accounts payable account. So your inventory is maintained because on that entry, the journal entry, we lost $3,000 on April 1st, but then the bill increases back the $3,000 to the inventory account. So your inventory is maintained, and now it basically shifts it from the holding account over to the accounts payable account. That's the result of the reconciliation. And those are all the processes that happen in the workflows that happen as a result of processing a purchase order in Fishbowl Advanced Desktop when it's linked with QuickBooks Online. Please subscribe and hit that like button to support our channel, and we will see you next time.